What's up, everybody? This is Investing Sensei here to bring you week 20 of the portfolio update. Before we get started, I just want to let you guys know this video is for entertainment purposes only, so I'll leave the full disclaimer in the description below. So right now what I have here on the screen is I have the S&P 500, and the S&P 500, for anybody that doesn't know, is basically the top 500 companies in the US. And basically you can treat that as kind of like a benchmark. So it's kind of like showing you the benchmark of how the stock market's doing very well. And right now it's actually tanking. So if we go over here to February 19th, which is about when it had almost the highest, we've actually gone down about 12.76%, so almost 13%. And a lot of the portfolios are looking in the red. So I just want to show you guys my portfolio and see how we're doing. And so now I have the agenda up here so we can get started. I hope everybody's taking good opportunity of these dips because you're basically buying great companies at a cheaper price. And so who doesn't like a discount? So that's what I'm doing. I'm not panicking and trying to sell out, because that's the beauty of investing in dividend growth stocks. So you're still going to continue getting those dividends no matter what the price is at. So if it's going up or going down, you're still on the same number of shares, and the dividends are still flowing into your portfolio, which are buying you more shares within, which will allow you to grow your portfolio long term. And so yeah, let me get started. So one thing here, we're going to talk about how much money I invested this week, which I actually did add a lot. And then we'll go over to the portfolio so we can see what the portfolio's value at right now. And then we'll go into the activities, see if I bought anything, sold anything, and as well if any dividends came in. And then I did check the emails. We do have some declared dividends, so we'll check those out. So let's go ahead and get started. I'm going to pull up the Google Sheet real quick. So let's go on to that. All right, guys. So we're here at the Google Sheet. And so on February 24th, I added $4,000 from my savings account. I saw the dip, so I was like, I'm going to go ahead and transfer this over. We're going to start buying some and take that opportunity. So I did end up depositing $4,000. And then on the 27th, I did add $500, which I do every other week. And then as well, that same day, I did add an extra $500. So that adds up to a total of $5,000 that I added this week, which is really awesome. And then that brings up our total invested to $70,401.84. So one thing right now that the market is doing very poorly, and hopefully it actually continues to go down more, because that basically means that I get to buy some more stocks at a cheaper price, and I'm fine because I'm holding for the long term, maybe 20 years or so from now, 30 years. It all depends, but I'm not planning to sell now. So, I just want to get those dividends going. And one of our goals for 2020 is to make $150 per month on average. And so basically what this is allowing us to do right now is that we're going to get to that goal a lot quicker and a lot cheaper, because, the stocks that I'm going to be buying are cheaper, and, the dividend yield's going up a lot higher. So that's going to help us a lot. But anyways, guys, let's go ahead and go over to the portfolio so we can show you how it's doing this week. All right, guys, so we're at the portfolio now, and you guys can see that we're at $86,725.48. So the portfolio has gone down a lot. We were last week at $92,922.40. And so that is a $6,196.92 and just lost. But, at the end of the day, we still hold the same number of shares, and I'll show you guys that in a little bit. But from last week, we were here at February 21st. We were at the $92,922 dollars. And so you saw the market tanking. About right here is when I started adding the $4,000 or so, and then I added an extra $1,000. And so yeah, the portfolio is right here at about 86,000, and we hopefully will continue to go down some more, because I want to add some more positions. And so you guys can see here as well, up here, I have about $700 ready to buy some more stocks. So I'm hoping to buy some tomorrow, and then a couple throughout the week that comes. Hopefully it continues to go down again. And if it still continues to go back up, then at least we took some opportunity. But anyways, guys, let's go over here to holdings. I want to show you this real quick. And so if we over here filter out by the shares, you guys see I have 134 shares in AT&T. All these shares here, no matter what the value of the portfolio is, I still own these number of shares. So if, for example, Disney is actually becoming really attractable now. The price on it, it's getting so cheap. It's about $118 or so. And I actually want to add some more to it. So, I still own 56 shares, when it was up in the 150s or so. Now that it's coming back down, I'm still going to own 56 shares no matter what. It just gives me the opportunity to buy more. But yeah, guys, don't panic and just continue to buy more and look for it long term. And so let me click here for the everything that's in the red. So like 3M, we're about 8% down. Cisco almost 18%, Pfizer 13%, Altria 12%, EPR Properties 16%. So I just gotta be selective on which ones I want to add more towards. And yeah, there's so many great companies that I want to buy. It's not enough money. But yeah, let me go over here to the activities, guys, so we can look at what we did. Alright, guys, so we're here at the activities, and I have it filtered out by February 23rd, which was last week. And well, let's go ahead and start from the very bottom. So on the 24th, I did do one buy and one sell, and I actually did sell out of one of the positions. So if we click on here, I sold out of Apple Hospitality, and I did end up buying Simon Properties. So I think that Simon Properties has a better potential than Apple Hospitality, so I basically exchanged it. And so I'm really excited about that. It's actually been tanking a bit more, so I'm going to be adding this throughout, dollar cost averaging. And yeah, let's go on to the February 25th. We got some dividends from Constellation Brands, so $3.13. And then again here on the 25th as well, we ended up, doing the $4,000 deposit. And then that same day, I, jumped too quick, which I think I should have waited a little bit, but, I'm doing it for the long term, so a couple of dollars is not going to make a difference. Yeah, so I bought $3,100, so I did 9 buys. If we go here, I bought 3M, EPR Properties, Wells Fargo, Visa, Pfizer, Simon Properties, Altria, Cisco, and Citifair. So that was a lot of money that I invested, and I believe in these companies long term. And then February 26th, I did 8 buys, so I did $903.13. So I bought Broadcom, Simon Properties, Altria, 3M, Pfizer, EPR Properties, Cisco, and Citifair. So almost the similar companies. I'm just trying to, add those shares that I showed you guys earlier, trying to increase those, and because that's going to get us to the $150 per month on average. And yeah, and so on the 27th, you guys see that I deposited the $1,000. So that totaled out to be $5,000. We still have about $700, available. And then on the 27th, I did 3 buys, so $300. I bought some Starbucks, so $100 worth of Starbucks, $100 worth of Altria, and $100 worth of Citifair. And then the last thing, LTC Properties paid us $1.59 on February 28th. So that's pretty good. You guys see that even though the market's tanking, we're still getting those dividends coming in, and those are going to help us buy more shares. And so this is the beauty about dividend growth investing. So let me pull up the agenda just so we are on track. And yeah, so the declared dividends, guys, let's go ahead and go over there. We have 2 stocks, so let me pull that up. All right, guys, so this is the declared dividends. I have the email pulled up, and so we have 2 of them. So we have Home Depot, which declared dividends, and Altria as well. So I'm going to go ahead and pull up Home Depot real quick. Alright guys, so Home Depot declares $1.50 per share quarterly, and that's a 10.3% increase from the prior $1.36. And they will be paying out March 26th, and then the ex-dividend date's March 11th. This is really awesome. We just got a 10.3% increase in our money, so our money is working hard for us, and our net worth is just increasing over time. 10% on the number of shares we have on Home Depot is what our net worth just increased, which is really awesome. And let me pull up the next one, which is Altria. Alright guys, so I have Altria. They declare 84 cents per share quarterly, and actually one thing here I want to mention right now that the stock almost is about $39. It got this past week. I've been adding some more, but anyways, the dividend yields almost about 8% or so, which is really awesome. And they have been increasing their dividends. Not this time. They will be increasing it next year, hopefully. And yeah, they'll be paying April 30th. And then the ex-dividend date for it is March 24th. So all those shares that we bought of Altria this past week, we're going to get, dividends for those shares. And because we are meeting the ex-dividend date of March 24th. So I'm really excited about that. And guys, don't panic. If the market continues to tank, take that opportunity, continue to buy more shares. And that's what I'm going to be doing. I still have some more savings that I'm ready to deploy, but I'm going to wait till it tanks a bit more. And as well, guys, thank you so much for watching. If you're new to the channel, please be sure to hit that subscribe button and be sure to hit that like button. As well, leave some comments. I'm always really excited to see what you guys think. And yeah, I'll catch you guys in the next video. So take care. Bye.